Hey everyone, welcome to Breakout Wednesday for the 24th of August 2022. It's currently about 4 p.m. on the West Coast, 6 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees a market, and everyone needs to take responsibility for their own decisions. Okay, so the market is, has had a bit of a sell-off, but nothing major. There's still a lot of kind of fear and uncertainty around when you kind of talk to people and listen to people. And so, I'm open-minded. I don't really have an opinion on it. I don't think anyone has any idea what the general market's going to do. But who cares? There are so many setups that have been setting up. There are some new leaders emerging and showing signs of leadership. And there's clear relative strength. There's nothing... I love it when the market gets hammered, okay? Like these 2 days, this period here, trying to find the really strong stocks is a lot harder than when you have days where the market gets hammered, because I just love on those days looking for stocks which did not get hammered. And that's the whole concept of relative strength. It is the most powerful signal in trading, in my opinion, full stop. There's nothing that beats it, absolutely nothing at all. Pure breakout trading isn't the same. It's hard to really do well unless you understand the concept of relative strength, in my opinion. It really undermines pretty much most decisions that I make, especially the most profitable ones over the years. They all revolve around relative strength. For those who are listening to the Google trade last year, years ago, when it was setting up in this huge base, it's one of the best examples I can ever come up with, because the market was correcting and Google wasn't, and then it broke out, and that was one of my best trades for in ages. And I've showed countless examples over the years of relative strength. And so what I'm going to do is quickly, and it was boring last week, not much broke out. I'm just going to quickly rattle through. I've realized the last kind of few months I haven't been talking about as many stocks as usual. Been trying to keep it lower, and it's hard to do that because my one of my edges is that I run through a lot of stocks each day. I'm talking about hundreds and hundreds and hundreds each day. But I have a key watch list that maybe has 50 to 100, and then I'm really analyzing them every day for relative strength, and then I'm doing all my pro trader scans on top of that. Okay, ADT kind of broke today. It's been showing massive relative strength in this base. Okay, the market was getting hammered. ADT wasn't. I didn't actually take this one just because I just don't like this 200-day moving average sitting right there. It's just not for me, but is an example of a super tight pattern that I've been watching, setting up in a base with relative strength. Okay, but I left it. One I did not leave, and I was hoping that it wasn't going to break today before this talk, was GRR. Now, GRR is another example, okay, of a stock that showed awesome relative strength on the big dumping days. This amazing base sitting on top of its 200-day moving average, and base in here with VCP, okay, real beautiful VCP. If you look at the volume here, beautiful VCP here, and then a clear base and a clear resistance level, and then a nice breakout. Okay, and which one would I choose out of the iron ore stocks? And I just want to run through it, and one of the reasons I like moving averages is because it shows relative strength so clearly. GRR is sitting on top of its moving averages. Okay, CIA is below all of its key moving averages with resistance of this 200 moving averages right above it. Never would I touch that in a million years over GRR. Would always go GRR over it, okay? Because the moving average is telling me that GRR has more relative strength, okay? But it did not get sold off as much as CIA, and therefore when the good times return, I think that if you usually GRR will have a much bigger move than CIA. And the same applies to the old FMG, okay? It's looking better than CIA, but in no way is it looking better than GRR, okay? And so where would I put my money if I had to choose one of those setups? 100% GRR. Not only is that a clear base, but it's showing massive relative strength compared to its peers, okay? And so that's that. Now, APM, it's reporting on Monday. It never broke out. I was hoping to get a nice quick trade in before that report. Not to be. that order's been scrapped, but that remains on the watch list for the future. CXO, okay, it's a stock that is a leader in the lithium space, and I'm watching him because it's come down. This blue line is a 21-day exponential moving average. It's not breaking below it. The 21 exponential moving average is just such a sign of strength. If a stock comes down and bounces off it and then bases, that is a stock that I need to be super serious about, okay? So CXO, I'm still watching. NMT, okay, it hasn't actually broken yet. It has a pretty nice base. It's a bit like GRR. It's not as good as GRR, but it's a bit like it. Nice base, moving averages all below it, nice converged, certainly a lot of upside there. It's had a decent run up, hasn't it? And so I would like it to base longer a bit. You don't always get what you want, and NMT is decent setup. I wanted to quickly talk about what I'm doing is really just scrolling through a whole bunch of stuff, which is just what I do every day, and I'm just talking shit when I see the charts, okay? OOO is an oil stock. I mean, shit, no, it's not. It's an oil ETF that follows the price of crude. And the reason I wanted to, I need to pause for a sec, 1 sec. All right, so I just wanted to get a chart of crude up, just to show what crude's doing, okay? It's just like crude on the NYMEX, I think. Okay, so crude's obviously had a sell-off, okay? And basing, but selling off, and then now it's broken above kind of that downsloping resistance line, okay? This is obviously a futures chart, and it's had 2 nice up days since that breakout. Well, today's day 2, all right? And then that was happening in Woodside. I was chatting to a few mates and showing them the chart of Woodside a few days ago, and the Woodside chart, definitely that's showing relative strength to the oil chart, right? I mean, it doesn't take ingenious to figure that out. The oil chart trended down a lot more than our Woodside chart. The Woodside really just formed a beautiful ascending triangle, and then it's had this lovely break out of it, all right? And then the oil chart, just with all that in context, we now have this ETF oil chart. So if you want to play the price of oil, you don't always need to become a futures trader. There are ETFs and other ways to do it, okay? This is obviously below these key moving averages. I do believe the best trade here was taking the Woodside breakout rather than OOO, but it is interesting. I just wanted to talk about how relative strength works in so many ways on down days, plus comparing futures charts to individual stocks and all that sort of stuff. There is so much edge. I can't express how much edge there is in getting very, very good at all sorts of kinds of relative strength. And I'm not talking about this stupid indicator, obviously. I'm talking about true relative strength, okay? Read Stan Weinstein's books or William O'Neill's books for a better understanding. Now, more charts. Let's do it. There is a base forming on OSL. Okay, this is a penny dreadful. I don't really trade penny dreadfuls that much, but here's a nice base. I don't know where my lines I've gone because I swear they're on there like a second ago. Super nice base on OSL, and not being affected by dumping days. Spec, but there's got to be something brewing there. My lines are gone again, so it must be having a glitch. Okay, RCE, it's still basing. I must say it looks groggy. Doesn't look like it wants to just break out of that and go batshit crazy, but I'm going to be looking at that for volume to come in. Really exciting volume, and if possible, if I have time, I'll be looking at that during the day to see when it's breaking out, if massive volume's coming in. I don't tend to do that during the day. Like, I wasn't looking at GRR today, okay? I just had the order in, and I was not paying attention because this is a hugely liquid stock. I don't give a crap about the market depth in GRR, okay? Looking at the market, looking at the order book in GRR is a complete waste of time, I guess, unless you're a scalper. But if you're a swing trader like me, it's just a legit waste of time and a cluster F. You're just gonna do your head in, completely go mentally batshit crazy. Whereas when you are dealing with little stocks like OSL even, or RCE, market depth is vital because it really, really is vital. Sometimes there's a wall of sellers up here at this resistance, and there's a little bit after it that you think you can get filled on. There's not much, and you just know that you might go for a run because of the order book kind of gives you a lot more of an indication, sends you a much clearer message when we're dealing with illiquid stocks or semi-illiquid stocks rather than the big boys. Okay, try looking at market, the order book on BHP, and if you think that if it's going to help you, then you're absolutely crazy unless you're a scalper, right? Another one is what's going on? Okay, another one is TON. Okay, and I talked about TON last week. So TON's another one where the order book would be incredibly helpful, and it's a penny dreadful, incredibly risky, prone to false breaks. But when you catch these ones, it isn't unusual for something like TON to break and then just bang up here, right, and nearly double very quickly on you. And so I reckon my strike rate, on these guys is probably not far off 50%. Okay, and that might sound not that good, but if you're hardly losing anything, I'm pretty ruthless when they don't work out. I'm trying to get out pretty quick and for a very small loss. And then the other 50%, if I catch runaway winners that just go crazy, huge amounts of money can be made, right? So but you got to be prepared to be wrong 50% of the time. Some people can't handle that with their ego. And then GCY had they found some gold on the 16th of August. It's a very West Aussie thing, find a bit of gold, have a bit of a gap up, probably do a cap raise soon, and and just suck in everyone's cash. But GCY, I like it if it can base more. I just need a nice, healthy looking Darvis box there after this massive desperation of people trying to get in on this volume day. Does not scare me to buy that breakout as long as I get a good base. And 4 days news flash is not a base. Okay, it's got 10 days at least. I mean, that's not even really a base. It needs to you're trading a two day breakout or a 3 day breakout. There's no edge there. In my opinion. Okay, now a few leaders on the NASDAQ, and there I could talk all day about the stocks I'm watching on the NASDAQ. I'm not going to, obviously, I've talked too long already, but I'm just going to quickly rattle through them because there are some massive opportunities presenting themselves on the NASDAQ markets and the US markets in new names that many of us have never heard of that are showing clear leadership. I'm going to run through some of them, not all of them, right? ARRY, okay, massive break here, which I totally missed, even though I was watching it and about to, I was meant to trade it and I didn't. I'm an idiot. But it is just now flagging, and there's something about that could have a massive move. Okay, CELH. Okay, I'm in this one, and I was hoping it wasn't going to break, but it did. Massive relative strength. Blue sky, it's in all-time high territory, and it has blue sky written all over it. CVLG, okay, another one that I'm watching. It's in a Darvis box. This is just classic Darvis, right? Massive move up, pretty expensive stock, consolidating, nice volume. It's just read about it, blah blah blah. It's classic Darvis. NBIX, another classic Darvis. There's a bit of a power play forming here. Huge up days on massive volume and forming a tight consolidation. TCDA, another kind of power play stock, based incredibly tightly, given zero shits about that market dump that happened. And another one, TMDX, broke out. I didn't hop on that one. I took CLH, and over it. I didn't realize that one had broken. It has. ULH is another one, and massive move up, an incredibly tight range it's forming. Okay, that's only some of them. The opportunities on the American markets is gigantic, and it's just they're endless. I've got to watch this currently of like 100 stocks that I'm watching like a hawk. That is enough for today. I hope someone out there gets something out of that. Take care, everyone. Chat next week.